With BIS Commodities, taking a look at the market and review this week. Let's just see where we close for the week. We have corn closing 3 cents higher at $4.45 in the March contract. It looked like soybeans was able to close 6 cents higher in the March contract at $13.37. Wheat was the big winner this week, up 21 cents in the March at $5.98. Cattle closed $1.15 higher in the February contract at $142.35. February hogs down 7 cents at 86.57. And it looks like the Dow is going to finish the week strong, up almost 40 points on the week, testing the highs at 1835, 1840 area has provided a little bit of resistance here, something to keep an eye on as we move into next week. The big news item this week in the grain markets was our February supply and demand report. It's one of the least anticipated reports of the year, and the results were pretty much not a volatile type trade, I guess, taking a look at the report upon the release of the numbers. In fact, March corn only traded 9 cent spread the day of the release of the report. But we did see the USDA increase exports in this report, 150 million bushels in corn. That's the largest increase in exports in 20 years in the February contract. So bigger than expected report, and we were able to tighten old crop stocks more than what the trade had expected. So sitting just under that 1.5 billion bushel carryout number. So we're seeing the continuation of tight stocks. The lower trade is telling us, so we are certainly finding some demand as we move forward. But the market still seems to be in a fairly very constant or sluggish trade. It doesn't seem as if it wants to fall out of bed, and it doesn't seem as if it wants to continue to push higher. Basis levels backed off a little bit with the higher farmer price moving. We also seen the commitment of traders report a week ago today showing that the fund long has all but disintegrated, so the managed funds don't hold a position of any size, either long or short, right now in this market. We are also determining our spring revenue insurance price, and at the close today, it looks like we're going to be sitting right around that 458 area as far as spring revenue insurance. Soybeans did see an increase in exports in the report that was released Monday morning, but that increase in exports, 15 million bushel increase in exports, was offset by the increase in imports. We increased imports 5 million bushels, and we increased our residual number by 10 million. So essentially we left our carryout at 150 million, viewed slightly bearish, and the trade did react to that early on, but we were able to find plenty of buyers on the break. The soybean market is stuck or concerned over the larger world supply. As we look at South America right now, all projections are calling for 10 to 12 million metric ton more than last year. The concern is, of course, that all the beans are sitting in South America, whereas the rest of the world needs them. So we are on a tight situation up here in the United States as well, but until we see some cancellations come to the forefront from China, we're going to continue to lend support to the front end of this market. We did see some cancellations earlier in the week, but even with the revised USDA's export forecast, we're still sitting 105% above it as far as export sales for the year. Last year at this time we were sitting at 95% of the USDA's exports, whereas the last 5-year average is right around 85%. So it's somewhat of a wild card right now. Will we see cancellations or will we not? And until we do, the front end of this market is going to be supported. The bull spreads and beans will continue to be supported. Soybean meal is probably a player as well, as the concerns are there. Somebody is caught on the short side as end users need to get some coverage extended. You're looking at a very firm basis still, although it has backed off from its highs in the eastern part of the grain belt, but we are seeing basis soften in meal and bean somewhat in the western corn belt. As well, we are seeing our spring revenue insurance price for beans as well. The running average is right around 11.20. The spread between new crop corn and new crop beans is starting to roll over in favor of beans a little bit as well. As we move forward, not a lot of major market makers in the coming months as far as the USDA is concerned until the end of the month when we get our planting intentions and quarterly stocks report. Next week we will get the February USDA outlook, where they'll throw some ideas at us as far as acres, something to keep an eye on next week. Taking a look at the livestock markets, hogs continues to see the summer months push to new highs. We've seen the June contract make new highs. Certainly an excellent hedging opportunity for individuals that have hope in hogs in that time frame. The strength is continued by the never-dying talk of the PED virus. Concerns moving forward are still prevalent. Doesn't seem to go away. Still in a lot of headlines. But we are seeing hog weights and numbers and slaughter weights continue to improve on the front end of this. We are seeing export demand strength in both hogs and beef, and that is helping support the market as well. The cattle market this week, we did trade futures a little bit firmer on the week. Cash was steady, 141.42 on a light cash trade this week from last week. We are seeing boxes fall out of bed. Down, the choice was down to 207 this afternoon. Select down at 206. That's off the 240 high in the choice from just a few weeks ago. The major concern in cattle, of course, is the supply side of the issue. This is the lightest kill week in 20 years, and analysts aren't looking for much of a larger kill week next week. That'll be a concern moving forward. Are we backing up cattle or not at this point? And the futures are reflecting they're concerned about the tightness in the trade. The other concern, of course, is the demand side of the equation, as we are looking at a very a low demand week along the East Coast, with 50% of the population residing west or in the Eastern time zone. With the storm there, one would expect that we are losing a little bit of demand that may not come back. Something to keep an eye on down the road. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.